Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, November 19th, 2009. Well, folks, the market is getting hit today across the board. The Dow is down 137 points, or 1.3%. The Nasdaq is lower by 43 points, or 2%, and the S&P 500 down 1.7%, or 18.5 points. Now, what is going on out there? What's the catalyst here? We talked about some key things, and again, folks, talking about the premium subscribers here, they're ahead of the curve, and this is the beauty of it, folks. I will go over how we knew or how we had a probability that the market would be on the downside in the coming days, starting earlier in the week when many people thought there was a breakout. We showed them, we talked about it, we talked about how you broke above the Great Wall of China back here, folks, and this is where it happened. This is the big point of interest here, going back to the 16th, which was Monday. Here you have the Great Wall of China. You gap above it, you move above, and you hit a high of 111.69. Now, you pulled back off of that high. Now, for those of you out there that are premium subscribers, you guys know what we've been saying. We've been saying, guys, watch for confirmation of that move. You have not technically broken above the Great Wall of China until you confirm the move with a secondary close above the high of that day from Monday. Did you get that, folks? Tuesday comes, no, you do not get that. Wednesday comes, no, you do not get that. Ultimately, the fall starts here, and look at this, folks. We gap down today, and the hard selling just starts. Now, part of it is the fact that the dollar is getting a bounce. Again, those of you that are in the research center in the chat room know that we were bullish on the dollar, bearish on gold and oil because we expected the bounce in the dollar. The dollar is getting a bounce today, a nice firm bounce at that. The market is also reacting to some negative economic news. You're talking about yesterday's home sales data. We talked about how ugly that was. In addition, there was other kind of key stuff that came out today. We had jobless claims. That wasn't a big deal, but the big question is, do those jobless claims actually, are they the truth, or are we just getting lied to? That's another whole story there. But in any case, the dollar's strength is pushing down the markets pretty significantly today. You can see here what happened. The market gapped lower, pushed all the way through the top of the Great Wall of China and all the way down to the lower Great Wall of China right here at 109.68. Minor bounce there, then you cut right through it. Now, the beauty of this, folks, was that we called a great play here. First of all, we said, look at this, guys, watch for confirmation, no confirmation. And as you traded off the confirmation or lack thereof here underneath the Great Wall of China, you started to uptick in a bearish flag formation. Now, you see 1, 2, 3 bars right here, and this is where the great call came. I said to the chat room, guys, when we were on this candle, and it was right here, I said, guys, this candle has to break above the Great Wall of China or you will fail. Now, that's partly based on webinar methodology. By the way, the next webinar, I believe, is the 12th of December coming into play. You want to sign up for that as soon as possible because we want to get spots. We had one a couple weeks ago. You want to be aware of that, folks. Now, as you've traded up into there, there was some methodology dictation portions where we know how to utilize it. Now, the market should have broken up here. If it didn't break up, it was going to break down. That is what I said to the chat room. Those of you that were in there and that in the webinar, you know what the methodology behind that is. Sure enough, it did not close above that. That's a sell signal. The market breaks to new lows. Definitely understand that, folks. That is unbelievably important when it comes to this. As you break down, you come right down into this level. Now, this 109.13 level, which was the low today, I want to show you why that level is important. Why did you get a support level bounce off of that? Go to your 60-minute chart. Take a look, folks. See this pivot low right here pulling back where you had the pivot low and then the gap up and we went to new highs above the Great Wall? That pivot low right here, gap fill. See that gap fill right in here and the pivot low down here? Look at the low on the market right there, matching up perfectly with that pivot low. That's where you're getting the support line to come in. Again, you have to be able to read all time frames. We utilize the 10-minute, the 60-minute, the daily, the weekly, the monthly on all time frames to understand this market. And again, what you can see is actually you're making a nice bearish flag pattern off of this pattern right here. Now, again, that's where your support came in. That's why you're getting the bounce off of that level. Take a look here. So you can see bounce coming in right in there. That's matching up with that low pivot that I just showed you on the 60-minute chart. Now we're back to the 10-minute chart. Off of that, you start to move up. And people in the chat room said, well, where do you look for a short scalp? Because, again, we're calling short scalps out today left and right. There were some good ones. I nailed one personally for 10 to 20 cents there on the downside for a bounce where I went long off for a bounce. Worked out beautifully. There were a bunch of other ones that people did as well in the chat room that were called out. But ultimately, as we were moving up here, many people said, well, do you short at this blue line? And I said, actually, no. because that's not a master level. That's not a big level intraday here. What I said is wait for the master level lower Great Wall of China here to short at 109.68. Sure enough, where does the market go? Right to 109.68. What happens off of that? It collapses back down. That's another scalping play that you can do. And again, guys, the methodology, we're big on teaching. In the Research Center, if you join the Research Center or the chat room, I would say 50% of everything we do is teaching, along with giving guidance, calling out calls for the traders, and so forth. You want to be aware of that, folks. Plays that worked out, we had the RTH workout, hot charts and alerts. We had Pro Trader watch list stuff that we added on the short side that worked out as well. Tons of calls. In addition, another huge call that came out last night, and I want to explain this because it's a teaching tool for you guys based off our methodology. As you can see, the market trading still down pretty significantly, happened on the 60-minute chart. And I went over this today, and I want to show you. Let me remove these lines. This is what I told the Research Center guys, which again, if you're part of the Research Center, you're privy to everything that goes on in that Research Center. You have full access to the whole thing per month as you renew and so forth. But one of the things I said to them is yesterday, I said, guys, you actually have a slightly bullish pattern formation here on the 60-minute chart. See, it's a bull flag. So you have your flag pattern, bullish consolidation right here inside that gap up. But I said to them, according to methodology calculations, there's a decent chance that this is going to fail tomorrow. And the key was to isolate that. Here you have the pattern. So you have the bullish pattern. And again, what happens is part of the methodology that we dictate says when a pattern fails, when it doesn't break out and you actually fall down, the moves down are huge. And the reason why is a failed move, and what you always want to remember is a failed move results in a mega move the opposite direction. So you can see how that worked out perfectly. You can see our calculations, our methodology dictated that it alerted me yesterday. I said it in the video last night to our premium members that you were going to see a possibility of a failure of this move, and if it failed, you'd see a big move down. Well, guess what, guys? Look at the market today. Fails, moves back, gaps down below. As soon as you gap down today below this flag pattern, you can see the flag pattern right here. I can even extend it so it looks more like a flag here. But as you extended yourself to the downside and gap down, that told you that was a failed move. You're going to get a big move to the downside. That is what you're getting now, folks, to the downside in a beautiful fashion. So you got to understand the methodology points here that we're pointing out. They will be key. They really will be key in making you an unbelievable investor, trader, swing trader, whatever it may be that you want to do. You can utilize all these techniques on all time frames. Now, we only focus on the 60-minute and the intraday in these videos because they're free. They're more for those of you that want to test us out, see what we say. But you can see, again, it works out left and right, every which way. Profits galore, folks. Again, a lot of the shorts that we picked up over the last couple days now very much in the money and working out beautifully to the upside on those short ETFs that we picked up. All right, now the market is bouncing back here. Why is the market bouncing back? Because the dollar is actually coming in just a little now. That's causing a little bit of a spike here. You still have resistance at the Great Wall here. However, I personally don't take the short again. Why? Because you already touched it once. You can see you hit it once here, bounce down, then you hit it again there. That's your short right there off of that kind of double top bounce. This third time up, you don't want to take that, in my opinion. It may pull back off of that. That's a very good possibility, but the odds don't favor it quite as much. I only take trades 80 to 90% success rate, guys. That's how we've made our name in the money stocks be as synonymous with guidance, education, and so forth, and profits as we have based on the techniques that we utilize. Again, if you move up, what would you look for? A move through this and probably up to the 50 moving average or the upper Great Wall right up here. That would be your next major shorting opportunity for a high percentage trade. If you can isolate that and you have discipline, you will be able to master this market left, right, and center. It is that good, guys. So again, I encourage you to come join the Research Center. Just this kind of data that we gave out last night yielded, and again, the entries that I called out in the Research Center in the chat room for short ETFs, paying literally for years of the Research Center alone or chat room. Have a wonderful rest of the day, guys. Again, keep an eye on your levels on the market. You're now hitting the Great Wall again on the upside. Remember, it's not quite as strong this time. Have a wonderful evening and join the Research Center, join the chat room, join the next webinar. You want to be involved in that, folks. It will give you an insight that you are unbelievable. It'll blow you away. Take care.